program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking music means it's time for the start of a new week and the start of a new week of Option Blocks. My name is Mark Longo from the OptionsInsider.com as well as the Options Insider Radio Network. And as we're kicking off this new week here on the Option Block, I of course encourage all of you out there to play along with us on the All-Star panel and surf on over to theoptionsinsider.com. You can find all of the news we're going to discuss on the show today, all of the topics, unusual activity, and stuff like that we're going to discuss. And of course, you can get your chance there to join us here on the All-Star panel by submitting your questions, your comments, your feedback via comment form, via email, whatever floats your boat. Questions at theoptionsinsider.com is the email. You just want to send us a straight-up email. Or, of course, you can find us on Twitter or Facebook. A lot of ways that you, too, can play along while listening to the Option Block. And, of course, joining me on the old All-Star panel today, you know them, you love them, my cohorts, my partners in crime. Starting off with the man beaming in from St. Charles, Illinois, lovely, scenic, and indeed snow-covered today. He is none other than the snowmobile man himself, Uncle Mike Tusaw. Uncle Mike, welcome back to the program, sir.
Always excited to be here, taking a break from the mountains and coming in to see the trading screen and discuss the world's problems and how to solve them.
I imagine you guys are excited out there to break out the old snowmobiles finally. It's your one chance of the year. You better enjoy it.
Oh yeah, it's ridiculous. It's for my son's snowmobile. It's just basically we just take him around to the yard or around the neighborhood. The brakes are out on it naturally, so it's gonna be a couple days before I fix those. But the big snowmobiles, I still want to see a little bit more snow before I break those out.
I'm not really a snowmobile guy, but it seems like everyone I know who has them or uses them quite frequently is always complaining of some breakdown or some malfunction. They seem to be the most problem-prone. They're like Jaguars from the 70s. They just have nothing but problems.
No, that's boats.
That's true. That's true.
I've actually had really good luck with them. It's just what happened is that I don't know what happened to the brakes on the kid's snowmobile. It was working fine last year, so somehow maybe your little birdies can help me out and how to figure out somehow some type of brake gremlin broke into the shed and messed up my kid's snowmobile brakes. Maybe someone has an in for them or something.
I don't know if my birdie's powers extend to the land of snowmobile gremlins, but I'll put a few inquiries in for you.
Much obliged.
See what I can do. Also joining us, beaming in from another snow-capped tundra, none other than the great state of Maine, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Andrew, welcome back to the show. I'm guessing you're not missing out on any bike rides today.
No, I think I am going to go ice skating, though, after the show. I got to do some tutorials at Option Pit, but then I'll be ice skating tonight.
Well, I hope the ice is nice and solid for you out there. Over here, we've had a little bit of cold weather. I'm not sure if I would trust the ice just yet, but perhaps.
No, the ice is when you see the cars on the ponds, you know it's okay. I was doing pond skating this weekend, so it's
yeah. I guess if you're following a car, that's relatively safe.
If the car don't go in, you don't go in.
A good life lesson. A good life lesson for the young ones out there. Pay attention to the cars when ice skating. And last but certainly not least, joining us from the hallowed halls of Options Express, wearing his fancy nautical cap, is none other than the Viceroy himself, good old Alex Jacobson. Alex, welcome back to the program, sir.
Good to be here, and today was moving day, so I'm now strategically placed between the options desk and the futures desk. So you may hear some interesting background commentary, but in the process of moving today, walk in, the market's down, and it stayed down all day. So in a very real sense, it was a quiet day because we opened lower and pretty much stayed there.
I look forward to the colorful stream of epithets that will certainly be floating our way from both the futures desk and the trading desk over there.
Yeah. Let me apologize in advance.
We might have to add that explicit tag for some of our iTunes listeners out there. Keep the young ones at bay. Keep the mute button ready, listeners. All right, here we go. With the team intact and assembled, we're going to dive right into the trading block.
The trading block.
All right, and those bells mean that it is time once again to dive into the trading block, of course, where we dive into today's action. And as Alex alluded to, it was indeed a bit of an action-packed day, a little bit different than what we've seen of late, where our screens have been naught but green for the better part of this year so far anyway, and now we're starting to see a little bit of a turn to the dark side, a little bit of a turn to the red. All of the major indices off about 1% or more on the day. The S&P down about 1.1% to 1495. NASDAQ leading the charge to the downside, down about 1.5% to 3131, and the good old Dow down almost 1% to 13,880. So a lot of love here to the dark side anyway today on the street. Of course, we talked on recent shows, what is there to really give the market some life, give it some vol, kick this vol back into high gear, or even sustain these current volatility levels. We're trading around a roughly 14 or so in the VIX cash, and it seemed like that was unsustainable given the current levels of realized volatility in the market. Well, what we saw today gave a little bit of life back to the vol, with the VIX cash ticking up about 1.75 points to 14.68 today. So a little bit of life in VIX land, and perhaps we'll start there, Andrew. It's just it's been interesting to watch the VIX of late because it's managed to sustain these 12.5 to 14.5 levels, even though the actual vol out there in the marketplace is, shall we say, substantially less.
Yes, this was the Groundhog Day today.
Yeah, it saw its shadow and it took off for about 2 points to the upside. So there you go.
Yes. No, on Friday everything was kind of whatever, but once again, I was fondly reminded of going back to October, where you close all your short volatility positions on a Friday because you never know what the weekend is going to hand you. So I think the weekend handed us just a bunch of whatever, some European kerfuffle, and maybe yields are going higher, and who knows? I didn't really see anything super substantial to make the market sell off, except that the market felt like it was looking for a reason to sell off. So,
people have been pocketing some nice gains of late. They're looking to take those off the table. A little bit of a rumbling out of Spain, and a few numbers that aren't as scintillating as perhaps they hoped. That's a great excuse to put some money in your pocket on a day like today.
To sell. Yep. So, and I think that's what happened. So now the next question is do I look at like a short volatility position again? I didn't close my short vol positions on Friday. I'm a little bitter about that today, but they weren't very big because I can't get too excited when the VIXs trade, 13.5 or 12, however, what was it, closed around 1290 or so. But I'm looking at it today like, okay, now how is it going to hold up here? So we need to see, a little bit, I think we need a continuation of this to let the volatility go. But normally I do not fade the first volatility pop. I wait to see what happens. And it really didn't turn around. It tried a couple times during the day, but the market it never really kind of left this sell mode. So
this is one of the few days.
Kind of where we are.
This is one of the few days where we haven't seen a reversal towards the end of the day, where we've been selling off. Oh, there it goes, right back up to unched on the day. We've seen that quite a bit of late. That seems to be essentially the narrative of the market lately, is just whatever causes the end of day volatility. Pick your poison, whether it's ETPs, whether it's all these other structured products, whatever the case may be. All of them being short gamma, having to hedge at the end of the day, whatever culprit you subscribe to for the end of day moves. We've certainly been seeing a lot of those of late, and they're typically in the opposite direction, which would kind of lean towards that short gamma side of the fence. All right, and outside of VIX land, there was some other movement catching our eye in the markets today. And aside from that tantalizing thin layer of snow for your snowmobiles, Uncle Mike, what else caught your eye in today's activity?
Facebook, that looked kind of interesting, down 5% on the day. Apparently people don't like that one, so they decided to start selling it. I like Facebook at lower levels, but I still not a huge fan at 28. I actually sold some 26 puts on it for a very, very, very small position, but that's probably the main one that was catching my eye today. Google, they're down 2%. The fruit company's down 2.5%. So a lot of this stuff's coming out of there's a lot of things coming out of the tech sector in general as to what's down in this market today.
I'm looking here while we're talking to see if there's any sort of specific news that would have contributed to this pronounced sell-off. You're right, Google. Facebook closing about 5.5% down on the day today to close at roughly 28. This trend continues. What if it just repeats right back down the other side of the parabola there, and we're debating the 17 puts again in a month? What do you think, Uncle Mike? Is that viable? Or of course you're short 26, so I'm guessing you're thinking it's going to hover around there somewhere.
Yeah, I think that's a good level with which I'd look to get into it at. Once again, I'm just saying this for the case of just the fact that they're down 5% on the day. None of my clients are in more than a one lot on this. That's how small of a position this is on. It was just, it's kind of become like a little bit of a hobby type of stock for me. So I could see it going down more, but right now with the premiums at the levels with which they're at right now, it's something that's definitely attractive, I think, for right now. And I think it's a worthwhile risk.
Of course, talking about profit taking, if there's a name right now that merits some profit taking, it is indeed Facebook. So I'm sure that contributed to this pronounced sell-off. This one certainly has some profits to go. So if you've been riding it all the way up from the high teens, then you probably are excited to put a little bit of that back in your pockets. And Alex, what, if anything, caught your eye in today's activity, sir?
My comments just mimic Mike's. It was Facebook and Apple today. The chatter on our social site was the price line of Netflix had actually fallen off the chatter screen. It really looked like a lot of people just were sitting on their hands today. They came into a market with profit taking and kind of watched it go down. So not a lot on the screen. I'm kind of on the other side of the Facebook equation than Mike. I thought 31, 32, you'd have a number of people getting close and you'd see some folks getting out of it. But I don't know. It looked more like, well, this happens a lot lately where, we have a string of days, we go 50, 60, 70, and everybody kind of scratches their head in disbelief. And then we have that 100 down day followed by a 60 or 70 or 80 down day, and we get all the prognostication about why the rally's over. And so let's see if this plays out that same cycle.
Prognostication. It's what we like to do here on the old show, Alex. It's what keeps us in business. A little bit of prognosticating every now and then. Good for the old soul, I found.
I was at a Super Bowl party this weekend with a large contingent of market makers. And there was a great deal of what I'll call cash speculation on the outcome going on at the party. And, of course, what happened is most of us got up and left when it was like 28-6, and
you missed the actual fun part of the game.
yeah. Then of course you get home, you flip on the TV, and you go, "Oh my God, now it's a game." Where was I? But Super Bowl, if you believe the Super Bowl indicator, we should have sold off today. But I think traditionally that has proven to be about the worst the market indicators. So I don't know, it's just a combination of things. It just really looked like today that you opened down on poor euro news, and there just wasn't a lot of paper coming in. Rates moved a little bit, but just didn't see a lot of paper.
Well, let's see. You got everyone in Baltimore was hungover from the game because they were celebrating. Not exactly a big, massive market hub. Everyone out in San Fran hungover because they're upset about that call at the end. So they were drinking to drown their sorrows. So that probably could have contributed. The boys on the P-Coast perhaps leaning on the sell button a little bit today. But other than that, I'm not sure if the Super Bowl really played too much of a factor. Even though you're right, that call at the end, there was certainly a little bit of action in yesterday's game, which I think surprised a lot of people. Most people these days tune it in for the ads because the game is usually so lifeless. But yeah, I had a fun one yesterday to actually keep us interested. Speaking of keeping us interested, we're going to close out the old trading block and put on our boots and our waders, I should say, for all the gunk in the gutters, and our trench coat and our fedora, because it's time to march on into Skid Row. It is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, that funky tune means it's time for the Odd Block, of course, the portion of the show where we peer deep into some of the shadier neighborhoods of the options markets. You may want to take your kids away from the computer or from the iPad or iPhone for this one, because it gets a little dark, a little shady. And as always, our tour guide for the dark and the shady is one Andrew Giovinazzi from Option Pit. Andrew, do you have your fedora and trench coat at hand, sir?
And my Option Insider shirt on.
Wow,
I decided
fancy.
to wear the shirt when I'm going to do the show to get in the mood.
That is a good thing to get you in the mood. You get that little guy with the fedora looking at you, and he'll get you in the mood for some unusual activity.
Exactly. All listeners, cover your children's eyes because it could get hairy in a few minutes. You
might want to cover the ears too, since it is indeed an audio program. But the eyes might help. I don't know. They might be terrified by the radio or the computer or whatever you're listening on.
Oh my God, what a maroon! I did it. All right, pay attention, Andrew. All right, Dell. Amazing that it always shocks me, Dell. I guess they're going to walk away with this company for not very much money, maybe $14 a share. But anyways, down 33 cents today, and I just basically saw a lot of these little out of the money puts trading. Only thing I could think of. So a block of, and there was huge volume in Dell. Don't get me wrong today. But the block I saw at some point today, the Feb 11 puts trading for 4 cents. Now, why would anybody buy the Feb 11 puts for 4 cents? Like the deal's going to get broken up prior to Feb expiration. I think mostly what it is let's say somebody's probably long some stock. They want to pick up the last few dollars out of the position, so they're going to hedge with the 11 puts, I guess. I don't see I don't see what the deal is. It's either was closing actually, or just they sold the puts and they're closing them and taking their money and running. The open interest was around 80,000.
Yeah, 80,000 sitting there on that strike. So probably, I wager a portion of that at least has got to be someone taking his ball and going home, I would think.
Because I was thinking how it doesn't make sense to cover with the 4 cent put. If you're trying to work the 30, whatever. I don't know where. Even if the deal goes through at $14, I don't think Dell's moving very much from here because there's always that extra, deal premium. So
yeah, that deal's got to go seriously south in the next couple of weeks for those puts to be a factor.
So it makes more sense that, the deal happened and they probably sold the 13 puts for when they started, grousing about it when the stock was trading, 12 and something. Probably sold the 13 puts for $1, and now they're buying them back for 4 cents. I say you buy them back at that point. Buying those junky those puts back. Anyway, the 11 puts. Sorry. That's what for some reason I got marbles in my mouth today. I don't know what the deal is. Next, An interesting trade in Delphi Automotive. I actually think this went bankrupt at one point, and it got taken out of bankruptcy. Do you guys remember that? Like in 2005, 6, 7, something
I remember them having
Yeah, I
problems.
remember
I don't recall if they went bankrupt. I remember them having some serious issues, shall we say.
They did. Well, they're not having serious issues anymore, at least from the stock point of view. It's just off its 52-week highs, trading around 38.89, and a fairly large spread went up. It looks like a customer bought back their Feb 35 calls 10,000 times and sold 20,000 of the May 40 calls. What this feels like is just a giant buy right. And there's huge open interest on the Feb side. So it just leads me to believe they're just rolling a huge short call position. But there looks like they did a kind of delta neutral today in order to get a better price. So they traded 2 calls for 1 on the roll when Delphi was looking a little weak. But the open interest, is 30,000 contracts in February. So I'm going to say they got to be rolling this trade. And, that probably bodes well for the stock. You got customers that want to keep rolling their calls. Even at a near a 52-week high right there, they still want to keep rolling. So they didn't let them take the stock away, because my guess is they would be fairly in the money calls. So you have to still have a lot of, you still have to want the stock if you're not going to just let them take it away. So that might be something for Mr. Tusaw to address in the strategy area.
And I'm looking here. Delphi did go bankrupt, and they came out of it and went public. They got spun off by GM in November of 2011. So they had an IPO then. They don't say exactly when they went bankrupt. Obviously, sometime before November 2011, because they came out of it and then got spun off. But yeah, so they did go bankruptcy. They did go bankrupt sometime in the past few years. So not exactly a banner run leading up into this, but now post IPO they've done fairly well, almost doubling. Yeah, almost doubling in the past couple of years here.
So this is probably something that's worked well for whoever holds this bunch of this stock, obviously. So, not a small position, probably 3 million shares to write calls against. The next one, a name I've never heard of, never traded, no clue about it whatsoever. Bruker BioSciences, BRKR. No clue on this stock at all. It is trading at a near-term high. So this was a curious one because it looks like there was a short 15-17 strangle that they had to buy back for a nickel for the call and a nickel for the put before they could open up a new one. So they closed the Feb one with 2 weeks to go, for nickel a contract, which jacked the implied volatility up short term, even though it's just a nickel for the out of the money contracts. And then it looks like, but it's not totally clear, they went and sold, because the trades went up mid-market, that they sold the March 17, the March 15-17 strangle, and they got 75 cents for it. So it looks like just like a strangle swap where they closed their short strangle and then they re-entered and sold another one.
Rolling the old shorts, and probably the broker maybe tying up some margin. They didn't want to tie it all up on that short thing for a nickel or so or a dime, so they closed it out, roll it on out to March, and let the good times roll, literally.
Exactly. Now, the stock has been doing okay as of late. So the implied volatility, again, like I said, has kind of a false reading because with Feb, there's still a couple weeks to go. And all these little calls that are essentially worthless at the low volatility, they trade a nickel, and it artificially boosts the volatility up. And the last one I have is, again, this looks like a closing trade, Questar, STR. Now, this stock is trading right around near its 52-week highs. And this just looks like somebody flat out taking some profits. They sold the STR 23 calls for 75 cents, 5,000 times. Contract volume is relatively small at only 1,100, just over 1,100 contracts a day. The open interest, though, on this strike is 23. I'm sorry, on the 23 strike is 5,000. And these actually calls traded around 50 cents not too long ago. If you look at it, the stock is just ripped from December to now. So this, to me, just looks like a profit taking from an earlier trade. And that's how I would put this trade up. Now, who knows if they're going to keep going, but They saw the weak market today, it looks like, and they said, you know what, we're going to take our money and hit the bricks.
Take your 50% or so and go home. Not a bad return for a few weeks there.
Yeah, if you can make a quarter on every trade, I think you'd be happy. Forever.
Yeah, I think that would do over and over again, yeah. Then you just start cranking away. Done.
Yeah, I think that would work. So, there was a lot of interesting activity. Usually on a down day like this, you see some, some people closing some positions like, the Delphi, the thing's gone straight up, so they're waiting for a day it pulls back a little bit. That way they get to buy back their short call a little cheaper, and roll to the next one and so forth. So, there was a little bit of action today on some of those buy right rolls, which makes sense.
All right. Thank you for that, Andrew. And listeners, you can now take your hands off your children's ears. We are out of the skid row of the options market. Not as shady today as it has been in the past. Just a little bit of interesting and intriguing activity, but nothing outright dubious, so you don't have to worry. You can put away your fedora there, Andrew, until you are called upon again, sir. And now we shall continue rolling with the show right on into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is indeed the portion of the show where the Viceroy takes the reins and I get to take a bit of a rest, and we get a glimpse into the inner workings of the machine that is Options Express. So, Mr. Alex, a.k.a. the Viceroy, what have you to share with us today, sir?
So looking at what today's action did in terms of volatility, gold is now less volatile than the S&P. I mean, we've been bouncing around the same vol for a while, but VIX on the S&P actually passed the VIX on gold. Gold volatility is about 13.8%. So that translates, if you look at March options, that translates into about $8 out of the money for the credit put spread and the credit call spread for the condors, and premiums are such that even at 8 points out of the money for March, return on risk is still about 10%. That's $1 on a $10 spread. SPX PM still dominates the index list, I guess, that extra days vol. And with the pop in VIX now, again, March expiration, you'd be looking at spread $75 out of the money. That would be one standard deviation out of the money. Still seeing a lot of premium selling here. Our internal put calls still show almost record rates. The short put call is 0.94. That's over 9 puts for every short call sold. So it's an interesting environment. We obviously saw vol tick back up. We saw the market down. We've all kind of reiterated that. Be interested to see what happens over the next couple of days. There's not a lot of stellar names coming up in earnings sprint and SIBO, as you pointed out, but we're pretty much through a lot of earnings season, and the numbers have been surprisingly good. So I think that's part of the rally that we've had. But as I said earlier, it came in down, market stayed down. I think a lot of people were kind of caught in the headlights, and that pretty much set the tone for the day.
Yeah, we neglected to hit on that at the top of the show, but you're right. It has been a surprisingly above par earnings season. I got some stats coming out of S&P today. Of the 256 companies reporting so far, about 68 8.5% or so have beat their estimates compared with a typical average of around 62% going back to 1994. So we are above average for earnings season so far. So that's interesting. And that dovetails kind of surprisingly into that stat you were just telling us, Alex, which is, of course, that the short puts are once again popular over at OX. Of course, from everything I know about your clientele over there and talking to Mike and Tim and John over the years of doing this show, the short put certainly seems to be a trade of choice, regardless of the environment over there. So I'd be curious to see what the upper and lower bounds are on like that short put to call ratio over there at OX. I wonder how low has that ratio ever become? Because I know at the end of the day, the preponderance of your customers are still probably leaning towards short downside in most of them. So what kind of range, if you've seen it, if you looked at this data, what kind of range have you seen for that put call ratio over time over at OX?
4 to 1 is the extreme. It tends to live in the 7 to 8 to 1 area most of the time. But prior to fiscal cliff, it was just under 9 to 1. This last couple of days, it's been 9.5 to 1. So even with the bump in vol, we're getting in terms of premium selling, we're seeing a lot of it devoted to puts. I mean, almost no call selling.
That is interesting. You know, that's something I think maybe we'll keep an eye on that for future shows, have a bit of a running tally of the OX put call and particularly the short put ratio out there, because I know that'll interest a lot of our listeners, and it gives us some insight into exactly what the clientele over there at OX is thinking. Well, thank you for that, Viceroy, and keep your hat on, because I think we're going to have a question for you coming up that might interest you in just a wee little bit. But first off, we're going to close out the Xpress Block, and now we're going to give you, the listener, your chance to join us here on the All-Star panel, because we're going to roll right into the Mail Block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
I love that drop. We don't get to use it as often as perhaps we should. So you, the dear listener, don't worry. I am working on getting more of your feedback into the show on a regular basis. A lot of great questions rolling in today. We'll start off with a question from Alessandro. He writes, what does the All-Star panel think of a long Ford 1112 1x2 put spread for about a nickel? This continues the Ford love here on the Mail Block. A lot of people writing in for Ford. Of course, Ford just had earnings last week. Selling off a little bit as a result. It had been dancing around that 14.5 level. Trading today, closing down about 1% to $12.88. And it makes a lot of people looking at some downside strategies. Ford 1112 is, of course, buying one, selling two to outlay a debit, looks like, of about a nickel. I've said my piece on Ford many times about these levels. Maybe I'll let Uncle Mike kick this one off. Uncle Mike, what say you about picking up a Ford 1112 1x2 put spread for about a nickel?
What month are we talking here? I'm trying to look at my chains here to figure this out. Sorry.
Assuming if he doesn't mention it, I would probably guess March. Let me look at the numbers here, see how they work. March, actually, well, that's weeklies. March seems to line up about a nickel for the 11s and about 16 cents for the 12s. So it looks like he's looking March.
Okay, so what we're doing here is we are shorting two of the 11s and buying one of the 12s.
Yes, ma'am.
Yes, ma'am. Oh my, that's the last time I ask a question. You know, I like it to a point. It's one that I would, if I'm in this situation, I'd rather have it go even money. I know normally a nickel doesn't sound like a lot, but I wouldn't want to pay a debit in this case for the privilege of owning Ford at $11. I think you're almost better off, because if that stays above 12, then you're buying an out of the money option. In this case, whenever I do a trade like this, if I'm doing a 1x2 to get into a stock or a 1x2 along these lines, I'd at least want to get a credit. Now, risk reversals, that's a different story. But in this case with Ford, especially with some of the premium available and also with the weeklies that are available, I think I would have a thumbs down to this specific trade. Like the idea, not exactly a fan of the structure.
So if he was collecting a nickel, you might be a little bit more favorable.
A little bit, but still not. I would be a little bit more favorable, yes.
And Mr. Free Juice, Mr. Free Premium, I have a feeling I know how you're going to come down on this one, Mr. Andrew, but what say you about our friend Alessandro's trade?
I don't like paying for this because really, ultimately,
how did I know you were going to go there?
Well, and the reason is because you pay for it. You're really the intent of the thing is to go down. Even if it goes sideways, you don't make any money. That's the problem with this this structure. Like if you buy an out of the money put and then keep selling forward puts against it, even if you don't get an immediate credit for the whole trade, your intent is to continue to sell premium to pay for, let's say, the back month put. In this case, there's just a whole lot of places Ford can go, and the thing just doesn't make any money. That's the problem. So that's kind of how I view that. So I agree with Mike on this one.
Alex, are you a fan of this put spread, or do you give it a big nay?
I'm with the other guys, but one thing I do like, at least that I think investors should look at more, is the 1x2 structure. Not a big fan of it in this case. It's under the rules I live under, I can't have a lot of opinions on stocks, but I like the structure, and I like the fact that if he's wrong, he's just not going to lose a lot of money, and I think that's the key. When you start becoming a spread trader, especially when you do ratio spreads, minimizing what you lose if you're wrong is a big part of it. So, like the structure, not crazy about the name he's doing it on.
Yeah, I think we all have said our piece about Ford over the past few weeks. I agree with pretty much everything you guys said for the most part. I've said before I'm not super enthused, even at the 11 levels here at Ford. I certainly, if I was going to do this, would want to collect something. I would not be shelling out for the privilege of getting long down there. But an interesting trade. I think I like where his head is leaning. Just perhaps work it a wee bit more. And oh, good.
One thing we talked about on Thursday's show a bit is I had this neighbor of mine who I know he's hanging over the fence or he's in the driveway. He wants to talk strategy, and he was talking about all the in reverse converts that his firm had sold, the structured notes, and how much pain there was in Apple. And the name that also came up was Ford, in terms of there being just a ton of those reverse converts sitting out there, which I think if Ford does start to get beat up, you're going to see a lot of pain in some of that note paper, and possibly you'll start to see some volume trying to re-hedge that note paper, not by the firms who sold it, but by the customers who own it. And next time he's hanging out in the driveway, I want to get his top 5 reverse convert names so we can get a sense of where the pain might be if the market does in fact continue lower.
Yeah, that's an interesting point. That's something I was going to bring up with you is, what levels are they getting into these things? Listeners, of course, the reversal conversion being a way to synthetically trade in and out of stock at different levels. Of course, we don't know what levels they were trading into and out of for Ford. I'm guessing if the firm was selling these, they're happy. They probably got out somewhere around the 14 level, left the buyers holding the bag probably or somewhere around 13.5 or something like that. So they're probably none too enthused with the outcome of that trade. We'll have to look in and see what levels that they were picking up. But an interesting point, Alex, and that leads us to our next question here. Coming in from Mr. Bob G. He writes, do you guys prefer to go into earnings long or short volatility? And Bob, I think if you've been listening to this show for any length of time, I think you probably can intuit an answer to that. I don't think anyone on this show has really come out and espoused a devout adherence to one way or the other. I tease Andrew every now and then about being a degenerate premium buyer, whereas we are all sellers. But that's a joke. We really tend to look at things on a case-by-case basis. I think I can safely speak for most of the all-star panel here, and no one here is really a hit the bid and then go away kind of guy. We tend to look at things. I would probably say of the last 6 months of all the earnings cycles I've gone through, I probably have come off with a preponderance of my positions on the short premium, short vol end of the spectrum, but that was pretty much by happenstance. That wasn't a plan. Typically, in fact, lately, I found myself leaning some of the other way just because I've said many times on the show, my time to micromanage these positions is very limited right now, and if you're trading short premium, you really need to be on top of it. That's one of the downsides of that trading style, so I've actually been leaning to some longer premium style of trades just to give myself a little bit more wiggle room to be able to flexibly trade in and out of them as my schedule allows. So, yeah, I don't think there's any real diehards Andrew, Mike, or Alex, you guys can correct me if I am incorrect, but I think I speak for all of us in saying that.
Yeah, amen to what you said. And just remember the last Google earnings where they came out early. And if you're going to be short premium going into earnings, stay close to your computer or have some type of limit trades on, because it's like a bad joke to say, Google released, early in the day instead of after the close, and that impacted a lot of people. But it actually happened. And, we all tell stories, all of us that have been around for a long time, all tell stories about, the time I was in there to make a dime and I lost $11 just because I wasn't paying attention or I took the phone call or, the neighbor came by with the golf clubs and I said, sure. So amen.
Yeah, damn that neighbor. Damn him and his golf clubs. How many $11 has he cost us all over a long period of time?
Well, the other thing, a lot of people think that when you're selling premium, it's such a high probability trade and it's an easier way, it's a lower maintenance trade. But in reality, you have a lot more dollar amount risk on the table. My opinion, I think you need to be watching the short premium trades or the short vol trades even more so than the long vol trades, quite frankly. The long ones, you can just set it up to where you can put in a limit order and for your profit. And then if you lose everything, who cares? It's just a limited amount of risk anyway, if need be. Obviously, you want to manage risk better than that, but you can at least go golfing and know, okay, the most I can lose is this amount because this is all that I have on the table. Whereas if you're short premium, then that can tend to get you some of those $11 losses.
Well said, sir. And speaking of Uncle Mike, we have a question coming in here just for you. So the rest of us are just going to take a break, Uncle Mike, while you handle this one. This one is coming in from Tony O. And he says, hey, Uncle Mike, I'd like your opinion on going along the GLD March 155-168 bullish risk reversal for approximately even money. Or would you prefer to add a short 172 call kicker and collect about 30 cents?
I don't think it's a good trade right now. I'm normally a fan of the risk reversal. I like it. I like doing all sorts of variations on it, and it's one of my favorite trades, quite frankly. But right now in the gold market, I don't think it's the right trade. I think that what I'm looking at for the coming months with gold, with volatile levels in gold with which it is right now, is I'm looking at the calendar. In lower volatility environments, the calendar is more of your friend than going vertical typically. And I believe that premium is just very low right now in gold. And with what you're getting when you do, and I think the price has gone up a little bit since you wrote this letter, for the 155 puts in GLD for March, it's 58 cents, 168 calls at 68 cents. So probably has gone up just a little bit since you wrote the letter, but let's just assume it's still at even money. I have a hard time risking $155 for a premium of 58 cents. So personally, what I would do is something along the lines of maybe a tighter to the money put spread, perhaps, and then setting up something with a calendar to the upside.
Interesting stuff. Leaning horizontal instead of vertical in this environment. I tend to agree with you. I'm not very enamored with that trade. I thought he had one interesting little addendum there, adding the upside call kicker. That, at least in a name like GLD, has a little bit of merit to it because we've talked many times about how these commodity products get bid up out of control to the upside. That is where, of course, the juice is from a vol skew perspective. So if you're adding in that little bit of a call kicker, you are taking advantage of some of those relatively exaggerated levels to the upside. But overall, you're right, GLD vol not exactly enticing me to want to come in and blast away on the downside, at least not anytime soon. But interesting question. Thank you for that, Tony O.
Very much so. Thank you, Tony.
Uncle Mike, you have your fans out there, see? I told you, when you were crying into your beer last week and you said no one likes me, I said, hey, I bet you'll have some questions coming in. And there you go. Tony O.
How do you do it with those birdies? I got to get some of those birdies of yours.
You never know what my birdies are up to behind the scenes. So last up, we have a question. This one's for you, Alex, so I will kick it over to you. He doesn't mention you by name, but you are certainly the most prepared to answer this. This is a question from Mr. Mikey. I like that. He says, does the OX Idea Hub take into account, changes in open interest when highlighting trading ideas? I think I know the answer to this one, but Alex, take it away, sir.
So it depends on what part of the Ideas Hub. In premium harvesting, everything is liquid and deep, so open interest isn't an issue. There is actually a tab in the what we call the big movers area, which strictly looks at open interest and strictly looks at where there have been big changes in open interest from the day before and showcases them, and then gives a trade or fade. So essentially, number one of the challenges with open interest is to keep in mind that it's a lag number. It's yesterday's number. And number two, prima facie open interest, just looking at the raw number, talked about this when Andrew talks about the big changes, needs a little more analysis. But so yes, there's an open interest tab that looks at open interest, even outside of the Ideas Hub in the OX Dragon, which is a trade finder that looks at anomalies. There are open interest measures, but the answer is yes and no. In big movers, we look at open interest. In premium harvesting, we don't look at open interest, but everything in premium harvesting is so deep and so liquid that it's not a challenge.
There you go. There's your answer straight from the horse's mouth, Mr. Mikey, the man who built the Idea Hub, so I think he would know. All right. Thank you for that, Alex, and of course, thank you to everyone who wrote in for the mail block today. But now we have to keep rolling along with the show and roll into our final segment, Around the Block.
Around the Block.
All right, and those car horns signal the closing segment of our show here, of course, Around the Block, and this is where we highlight some interesting things that are on our radar for the rest of the week, at least until our next show here. And there's still quite a few earnings on the horizon. We talked about Take-Two several times on the show in the past. We're seeing one of their counterparts in the video game publishing realm, Activision, announcing on the 7th after the close. They closed today about $11.60, a big video game publisher. Of course, they publish World of Warcraft and all that stuff. So an interesting one if you're into the gaming sector, been following along what we've been talking about on the show lately. Probably want to keep your eye on Activision. I've talked about this name a number of times in the past as being one of my favorite bullish risk reversal, short downside put spread candidates because it has been so range bound. It's starting to break out of that range a little bit, but over the last couple of years, this has been my Microsoft, my go-to premium harvesting name. Also, we have Chipotle. The name, this one actually has rebounded substantially since it sold off quite a bit over its last earnings, trading closing today at $300.10. They have earnings tomorrow on the 5th after the close. I used to call them the Stealth Apple. Then took that moniker away because they really erased half of their value and Apple was still flying high. Apple has since erased a substantial amount of their value. Chipotle has rallied, so it's not as far off of a comparison any longer, but still an interesting one to watch. Chipotle being certainly quite volatile of late and has since the big erasure back on the last earnings announcement, it really has rallied about 20%. To back up to the 300 level. So been a good run for Chipotle. Disney, another one coming out on the 5th tomorrow after the close. Disney, if you have children of any kind, Disney has been lighting it up lately, especially little boys. They, of course, have had Marvel for a long time. They just acquired Star Wars, which is a license to print money, particularly because they're actually going to do something with it. And, of course, now they've been making noise about in the video game realm with some stuff that looks like it's sure to print money. So Disney having a good run of late, and the stock rallying from about 48 recently all the way up to closing today, almost at $54 today. So good run going on here in Disney, and we're seeing the looks like the straddle pricing in about a $2.50 move or so. So should be some interesting stuff to watch here after hours. Disney, LinkedIn, one of Kavanaugh's old favorites, coming out on the 7th after the bell. That one rallying substantially of lately as well, closing at 123 today. And Take-Two, Andrew's favorite. Actually, we've talked about them several times on the show here. They're actually having earnings tomorrow after the bell, closing at $12.51. And last but certainly not least, I saved them for the end because they are probably a little more interesting for our audience. SIBO having earnings having earnings coming out after the bell on the 8th. This is the name that just has been on a tear since the since the NYSE ICE takeover was announced. Everyone speculating that SIBO would be next, rallying substantially, trading in the 34 range, which is essentially pretty much mimics or reaches the heights of their post-IPO trading before they turned all the way to the downside and went down south into the low 20s. So interesting name to watch. SIBO lighting it up of late on the VIX side. Some interesting names to note. I know, Andrew, you're a big fan of Groupon as well, so that one certainly seems to be on your radar, would you say?
Yeah, Mark actually has been just looking for another reason to short it.
Too bad we don't have can't bring Grigas back on just to harp on him. It's pretty much hasn't moved since he bought it. It has a little bit of a range, but still hovering around that. Sold off today, but still hovering around that 5 handle. And
they're just going to be ugly until they're not, because they're so covered with fleas right now that nobody really wants to touch them quite yet.
Speaking of covered with fleas, I wasn't going to bring them up, but since you chimed in, there is, of course, your favorite Zynga coming out after the bell tomorrow, too. They're hovering right at your strike, Andrew. They're hovering they closed today at $2.56. We all know your short size of the 2.5 puts. So what's the play going forward?
Those are closed. Maybe until after earnings. I don't think this earnings period is going to be very good. I want to see how they deal with they basically got what do they get? Unliked by Facebook or deliked or whatever you call that. And we'll see what happens. The things that look more interesting for Zynga are maybe, getting into online gambling, and actually if they could ever pass some decent online gambling laws, they're pretty well positioned to sort of slowly sort of seep into that business. So it would be, again, it's like a long-term thing, but it's still a compelling kind of value play on, kind of the assets of the company and stuff like that. So I'm hoping, and I think this is kind of a trade is more suited to a risk reversal for a credit, because there just isn't a lot of downside, in the stock from the 2.5 range. So
see, you've been on the show long enough. You can see where my brain is going. I was just going to ask you, what do you think about the upside component to that? What do you think about the old bullish risk reversal? Are you actually putting on some upside here? Or are you going to wait and see?
Just want to see what happens. But I don't mind if Zynga makes a little pop. In the meantime, I don't know if the thing is, you kind of start it with the 2.5 or 2 put. I'll see where the paper is tomorrow. And usually for me, earnings plays, unless you get in like 2 weeks early to kind of play like a bit up and vol on some of these weekly time spreads, there's really not anything there until the last minute. I generally look in the last hour of the day before the earnings announcement and see if just something has gotten totally out of whack that might be, worth it as an entry point. But, for the same reasons Tusaw likes, he's like, you only sell stuff you puts and stuff something you want to own. So that all that stuff still holds true for even a name like Zynga, but and just waiting to see what, if there's any good pricing there to make it interesting. But I like the idea of the risk reversal in there because if the company does kind of pick up, it could be a $5 or $6 company without too much trouble. So, and in those cases, those risk reversals for almost nothing can look pretty good. So
there you go, listeners. You heard it. Andrew said load up on the March 2.5, 3.5 risk reversal right now for about 14 cents. That's. I'll put those words out there for you. Let's do it for size, he said. Come join me on the dark side of Zynga. Feel my pain. All right. Thank you for that, Andrew, and thank you to all of my cohorts here on the old All-Star panel. But unfortunately, that is all the time we have for this show. But before we go, I like to check in with each of you to see what you have going on in your respective necks of the woods that may indeed be interesting to our listening audience. Starting off with you, Mr. Andrew, what is coming up in the land of the pit?
We do have tomorrow, I believe, we have a guest speaker teaching you about taking the emotions out of your trade, which is a You want to keep the money in and the emotions out. Fausto Pugliese, remember, one of the favorite all-time names in the business.
That's a great name.
And as Mark just texts me, I gotta shut that stuff down. And the time on that tomorrow is, I believe, 7 o'clock. As soon as I can get an answer from my website, which is, it is. Actually, it's 3 o'clock. It's in the middle of the trading day, 1 hour before the close. So 3 o'clock Eastern time, a webinar from Cyber Trading University with Fausto. They're always well attended, usually, and I'm generally full up. So anyway, take a look at it. And we start our February class on Wednesday, our gold class. That's full too, but on and on and on we go in the land of option trading. Mark will have some good announcements, I believe, coming up, as well as our website changes, and we're adding more goodies to the website.
All right. Thank you for that, Mr. Andrew. And Uncle Mike, what is coming up in the land of RCM? How is that webinar train rolling along?
We are in full force. We have a webinar every Thursday night for the next 5 weeks. This Thursday night, we're really excited. First stop on this webinar train journey is at the Option Pit, actually. Some guy named Sebastian is going to be doing a webinar on using the VIX as a trading indicator. Thursday night, 8:30 p.m. Chicago time, 9:30 p.m. Eastern. You can get more information on that right where you clicked on this show. There'll be a link there. I believe there will be. Is that correct, Mark?
Yes, there will be.
Okay.
All right. Thank you for that, Uncle Mike. And last but certainly not least, one last time, sir, put on your Viceroy cap and illuminate us on the upcoming goings-on over there at Options Express.
Saturday live events. So February 9th, the crew is in Dallas. February 23rd, they're in Indy. March 9th, they'll be in Chicago, out in Lombard. And all of our live events are now simulcast. So if you can't make it to the live event, don't have the unique opportunity to meet either Joe Cusack or Jimmy Rouzan, our presenters, you can come to the site. They're free. They're free if you attend in person. They're free if you tune into the simulcast. And February 17th to 19th, a big industry event, the Traders Expo out at the Marriott Marquis in New York. If you live in the greater New York area, you've never been to the Expo, terrific event. I've spoken there many times, but you get to see our crew. You get to see a lot of presenters. It's always an exciting event. And the webinar schedule, we do a webinar almost every day. I know I just put 4 webinars up for the Idea Hub, February 20th and 27th, and we're now archiving those, so listeners can come back and listen to them at their convenience. But it's the new year, and we're in the swing of things, so please plan to attend or come to one of the webinars.
All right, thank you for that, Alex, and we can hear the swing of things going on right behind you as OX kicks on into high gear. And speaking of kicking on into high gear, of course, you can find all of the topics we discussed on the show today by surfing on over to theoptionsinsider.com. You can find a lot more insight into those unusual activity alerts written by our own Andrew, the Rock Lobster himself, as well as the breaking news from the world of options, and of course all of the archived episodes of the Option Block for your listening enjoyment right there. If you missed an episode, you want to go back and check on what did we say about so-and-so to either illuminate yourself or perhaps mock us for missing a prediction, then by all means go do so right there in the archives. Of course, you can always find us iTunes, Stitcher, wherever finer podcasts are purveyed. And last but not least, I encourage you to join our listeners like they did today on our mail block segment, where you too can make your voice heard. You can, of course, use our comment system, find us on Twitter, find us on Facebook. A lot of ways to reach out to us. Of course, you can shoot us an email, questions@theoptionsinsider.com. Just be sure to put the option block or question for the option block in the subject line so we know which show you're referring to. And last but not least, before we go, all of us here on the Option Block All-Star panel want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated, all rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.